Ladies and gentlemen, the Vice President and I are very pleased to welcome you to our press conference. We'll now report on the outcome of today's meeting of the Governing Council. Based on our regular economic and monetary analysis, we decided to keep the key ECB interest rates unchanged. HICP inflation rates have declined further, as anticipated, and are expected to fall below 2% in the coming months. Over the policy-relevant horizon, inflationary pressures should remain contained. The underlying pace of monetary expansion continues to be subdued. Medium to long-term inflation expectations for the euro area remain firmly anchored, in line with our aim of maintaining inflation rates below but close to 2%. Overall, this allows our monetary policy stance to remain accommodative. The economic weakness in the euro area is expected to prevail in the early part of 2013. In particular, necessary balance sheet adjustments in the public and private sectors will continue to weigh on economic activity. Later, in 2013, economic activity should gradually recover, supported by our accommodative monetary policy stance, the improvement in financial market confidence, and reduced fragmentation, as well as a strengthening of global demand. In order to sustain confidence, it is essential for governments to reduce further both fiscal and structural imbalances and to proceed with financial sector restructuring. With regard to the liquidity situation of banks, counterparties have so far repaid 140.6 billion of the 489.2 billion obtained in the first of the two 3-year long-term refinancing operations, LTROs, settled in December 2011 and March 2012. This reflects the improvement in financial market confidence. Repayments are provided for in the modalities of the 3-year LTROs and are at the discretion of the counterparties, who must appropriately assess their funding situation, their ability to provide new loans to the economy, and their resilience to shocks. We will closely monitor conditions in the money market and their potential impact on the stance of our monetary policy, which will remain accommodative with the full allotment mode of liquidity provision. Let me now explain our assessment in greater detail, starting with the economic analysis. Euro area real GDP declined by 0.1% quarter on quarter in the third quarter of 2012, following a contraction of 0.2% in the second quarter. Available data continue to signal further weakness in activity in the fourth quarter and the beginning of 2013. This weakness reflects the adverse impact of low consumer and investor sentiment on domestic expenditure, as well as subdued foreign demand. However, financial market sentiment has improved, and the latest survey indicators confirm earlier evidence of a stabilization in business and consumers' confidence, albeit at low levels. Later in 2013, a gradual recovery should start, with domestic demand being supported by our accommodative monetary policy stance, the improvement in financial market confidence, and reduced fragmentation, and export growth, benefiting from a strengthening of global demand. The risks surrounding the economic outlook for the euro area continue to be on the downside. They relate to the possibility of weaker than expected domestic demand and exports, slow implementation of structural reforms in the euro area, as well as geopolitical issues and imbalances in major industrialized countries, which could both have an impact on developments in global commodities and financial markets. These factors have the potential to dampen the ongoing improvement in confidence and thereby delay the recovery. According to Eurostat's flash estimate, euro area annual HICP inflation was 2% in January 2013, down from 2.2% in November and December, and from 2.5% in October. On the basis of current future prices for oil, inflation rates are expected to decline further to below 2% in the coming months. Over the policy-relevant horizon, in an environment of weak economic activity in the euro area and well-anchored long-term inflation expectations, underlying price pressures should remain contained. Risks to the outlook for price developments continue to be seen as broadly balanced over the medium term, with upside risks relating to higher administered prices and indirect taxes, as well as higher oil prices, and downside risks from weaker economic activity and, more recently, the appreciation of the exchange rate. Turning to the monetary analysis, the underlying pace of monetary expansion continues to be subdued. The annual growth rate of M3 decreased to 3.3% in December 2012 from 3.8% in November. Shifts from overnight deposits to short-term time deposits led to a decrease in the annual rate of growth of M1, which declined to 6.2% in December from 6.7% in November. And outflows from marketable instruments dampened overall M3 growth. A further strengthening in the deposit base of MFIs in a number of stressed countries took place in December, in combination with further capital inflows into the euro area, both of which continue to reduce fragmentation. The annual growth rate of loans to the private sector remained negative in December. This mainly reflected ongoing negative annual growth of loans to non-financial corporations, which was minus 1.3% in December after minus 1.5% in November. However, annual growth in MFI loans to households remained broadly unchanged at 0.7% in December. To a large extent, subdued loan dynamics reflect the current stage of the business cycle, heightened credit risk, and the ongoing adjustment in the balance sheets of the financial and non-financial sectors. In line with these developments, the Bank Lending Survey for the fourth quarter of 2012 confirms the weakness in credit demand and the continued effect of credit risk considerations on the tightening of credit standards. At the same time, the survey confirms the positive impact of Eurosystem measures on banks' overall funding and liquidity situation. In particular, banks reported improvements across all funding categories in the fourth quarter. In order to ensure adequate transmission of monetary policy to the financing conditions in euro area countries, it is essential to continue strengthening the resilience of banks where needed. Decisive steps for establishing an integrated financial framework will help to accomplish this objective. The future single supervisory mechanism, the SSM, is one of the main building blocks. It's a crucial move towards reintegrating the banking system. To sum up, the economic analysis indicates that price developments should remain in line with price stability over the medium term. And a cross-check with the signals from the monetary analysis confirms this picture. As regards other policy areas, structural reforms and fiscal adjustment can complement each other, thereby improving the outlook for job creation, economic growth, and debt sustainability. Past policy action is bearing fruit in terms of both the unwinding of existing fiscal imbalances and the reduction of current account deficits. In particular, in several countries with particular adjustment needs, contained growth in unit labor costs signals greater price competitiveness and exports are performing better. Governments should build on the progress achieved in fiscal consolidation, strengthen competition in product markets, and continue with labor market reforms. This would boost the euro area's growth potential, reduce high structural unemployment, and improve the adjustment capacities of the euro area countries. We are now at your disposal for questions.
Please.
Jana Randa with Bloomberg. 2 questions, Mr. Draghi. There have been reports in the media in the past hour that the ECB has reached a deal on Anglo-Irish, and I was wondering whether you, A, could confirm that, and B, could provide us with details on the agreement. And the second question I have is concerning the euro. I'm wondering how concerned you are about the recent appreciation of the currency and how much of a risk that poses to the economic recovery that you're predicting. And related to that, I saw you changed, or I heard you changed your language on the recovery. You said you expected later in 2013, whereas you said in the second half and at previous occasions. So I'm just wondering, does later in the year mean it could be earlier than the second half, or could later in the year mean very late in 2013? Thank you.
You're asking what time? No, what time is too hard. I can't answer that. But on Ireland, let me say this: there wasn't a decision to take. I mean, the governing council unanimously took note of the Irish operation, and I'm going to refer you to the Irish government and the Irish Central Bank for the details of this operation, which was designed and undertaken by the Irish government and the Irish Central Bank. I can only say today that we took note of this.
You did object to a proposal 2 weeks ago.
We said simply that today we took note of this. We all took note of this. On the exchange rate, well, the first thing is that the appreciation is, in a sense, a sign of return of confidence in the euro. But net of the confidence, of the return of confidence, exchange rates should reflect fundamentals. And by and large, both the nominal and the real effective exchange rates are on their or about their long-term averages. However, as I said last time, the exchange rate is not a policy target, but it's important for growth and price stability. And we'll certainly want to see whether the appreciation, if sustained, will alter our risk assessment as far as price stability is concerned. In any event, next month we will have the new projections. In the meantime, We will maintain our accommodative monetary policy stance and will closely monitor money market developments. Thank you.
Tony Connelly, RTE Ireland.
Thank you. Tony Connolly from Irish Public Television, RTE. Just on the question of Anglo-Irish Bank, you've mentioned that the details should be left to the Irish government, but was this part of a careful choreography that was worked out with the Irish government? Last night we had the Irish Parliament rushing through legislation. We had the Irish President flying back from your own country to sign legislation. Was this part of choreography with the ECB? And secondly, were all the statements from the Irish government, including the Irish Prime Minister, over the past 2 or 3 months helpful in reaching whatever we have reached today? I'm still not clear what we have reached. Thank you.
Well, you're absolutely right about not being clear, because we took note of an action that's been undertaken by the government. And I wouldn't actually speak about choreography. It's been Irish government and Irish central bank actions, and we took note of these actions.
Sylvia Watwa, CNBC, please.
Two questions, as per usual. The first one about the LTRO repayment. What's your verdict on it, your evaluation? How much of a normalization of the bank liquidity situation do you see that positive sign? How far do you think we've gone down to the route of normalization? The other one, again, on the euro, I'm afraid, there were calls from Monsieur Hollande for, not exactly in those words, but around those words, for a more proactive exchange rate policy of the ECB. What do you say to that?
Well, let me first answer to the first question, which is in a sense broader. Let me go through a few of the key salient facts that would help us to have a picture of the situation of financial markets and also the real economy. If you look over the last 6 months, we certainly had significant improvement in the on the financial side of the economy. You mentioned funding for banks. Funding for banks, this month, has been 65% more than it was last year, same month. The sovereigns are proceeding with their funding plans. Just to give you again an idea, 55% of total sovereign issuance in this month has come from non-core countries, while last year 93% of total sovereign fund issuance was coming only from core countries. Let me also add that both Portugal and Ireland tapped the medium long-term segments of the bond markets. And this also shows return of confidence, not only in the euro, but also a confirmation of the progress that these countries have achieved in their economic policies. Target 2 balances continue to improve. Also, the repayment of the LTRO is a sign of confidence, but it simply says that many banks had accessed LTRO for precautionary reasons, because they were a year ago uncertain about the liquidity situation, about the funding prospects, and now they are less uncertain, certainly, than they were a year ago. So that is also a positive sign. Let me also add one important detail, however, that when we estimate, and I can't get in greater detail really, when we estimate repayment for the second LTRO, we are left quite persuaded that the excess liquidity will be well over 200 billion, confirming the monetary policy stance as being accommodative. We also see continuing signs of less fragmentation in the euro area. We see cross-border activity increasing by other euro area countries into the non-core countries, but also outside the euro area into both core and non-core countries. And this is clearly shown by the increase in the next external assets position of the euro, which has gone up. So all in all, this gives a picture of certainly less tight financial markets than they were a year ago. Let me also add that corporate funding, non-banking corporate funding, is also having a good season. Corporate issuance is actually being very significant. Let me also add another detail which I rarely comment on. The cost of protecting against inflation and against deflation has gone down, which means that not only expectations of inflation are firmly anchored, but they're anchored both sides. So price stability is today, at least what the markets tell us, more likely than it was before. The current account surpluses of stressed countries continue to increase. And that's also another positive sign, as well as unit labor costs in most of the stressed countries continue to decrease. Now this is on the, now I've given you a list of positives, but the situation remains fragile, and we see that this fragility is signaled by the credit flows, which, as I just said in the introductory statement, remained weak. Also, if you look at the bond issuance, you clearly see that while large corporates that can issue bonds can do so and finance themselves via capital markets, the SMEs that have to finance themselves via the banking market, the banks, are actually constrained. For them, credit is and remains tight. There is also another phenomenon which we are looking into and that's the situation of large banks versus small banks. And it appears that small banks are tighter than large banks. So all in all, credit costs and availability remain challenging. I think that's what the surrounding environment for the environment surrounding the repayment of the LTRO have just taken place.
Joanna Drake, Market News.
I'm sorry. Hollande. President Hollande. I think we should always remember that the ECB is independent, and let me say, we heard all over the world now talking up, talking down currencies. The ultimate judgment of the effectiveness of this strategy is to see what markets make of these statements. Thank you.
Joanna Drake, and then Eva Kühn Reuters, please.
Johanna Drake, MNI. Mr. Draghi, you included a new section in the introductory statement linking money market conditions to your monetary policy stance. Can we conclude from that you're ready to counter any possible increase in market rates as a result of a liquidity drain with a possible cut in the main refi rate? And in conjunction with that, so far, the ECB appeared to be pretty unconcerned about the impact that a drain of liquidity would have on market rates in the near term. At what level of excess liquidity would you actually expect there to be a more significant pressure on market rates? And a final question related to that is, you said that you would continue the fixed rate full allotment mode. We knew that until mid-year, but is that an indication that you would likely continue that procedure beyond the current deadline? Thank you very much.
Thank you. Let me say to the first and the third question that we don't pre-commit, but as I said, our monetary policy stance is accommodative. Our overnight interest rates are close to zero. So there are plenty of signs that we are in the full allotment mode, ready to offer liquidity to the banking system as needed. On the other point, on the second question, I said before that according to our estimates, even after the second repayment of the LTRO, the excess liquidity should remain well above 200 billion. Third, I wouldn't make too much of the increase in Ionia, which we have seen recently, because it may be due to a variety of factors, some of which are actually structural, depending on which banks have actually repaid the LTRO. So changing the composition of the banks in the Ionia, you would have an effect on the levels of the Ionia itself. But also you have other factors like volatility. But having said that, I think I've said many times that our monetary policy stance remains accommodative.
So above 200?
We don't get, you see, I said 200 because because there is in fact a sort of a relation, but you have to be very careful about getting stuck with a figure because you have so many other factors. If you go back and you look at, is there a one-on-one relation between 200 and a certain level of Ionia? Well, the answer is, it's not certainly, it's changing through time because of many other different factors, as you can imagine. Volatility, financial markets, and other kinds of developments.
Eva Kühn.
Thank you. Eva Kühnen, Reuters. Here. Another question on Ireland. The action that the Governing Council unanimously took note of, is this a swap of the promissory note to a government bond? And if so, would the ECB accept this government bond as collateral? And the second question is on Monte Paschi. Some people have said that you swept the problems at Monte Paschi under the carpet because the banking scandal, or in fact a meltdown, in 2011 would have spoiled your chances of becoming ECB president. What would you say to that?
Well, I say, let me first respond to Ireland. I said we took note. We don't want to enter into the details of the swap, and it's entirely the Irish government and the Central Bank of Ireland actions. And as I said, we unanimously took note of this action. On the other, let me say that first, you've had for about a week and a half a Banca d'Italia detailed account on the website of the whole story, where you could see that Banca d'Italia has done everything it should, and appropriately and in time. But if you doubt about that, you also have the IMF team who was in Italy for a financial sector assessment. So within that context, the IMF has publicly stated that their preliminary view is that the Bank of Italy took timely and appropriate action within the limits of legal framework to address problems at the MPS. Oversight was close and supervisory action escalated appropriately as MPS's problems became acute. This is consistent with the overall positive assessment of the Bank of Italy's compliance with the Basel Committee's principles for effective banking supervision. Looking ahead, it will be important for MPS to follow through on its restructuring plans in order to restore its health and profitability. Also, probably don't forget that it was me who signed both inspections. And it was Banca d'Italia that gave most of the papers and documentation to the judiciary. The point is that if you have a fraud, normally supervisors don't have police powers or judiciary powers. So they look for supervision. So finally, let me say that I don't want to take side on the Italian elections, but you should certainly discount much of what you hear and read in blogs and other stuff as part of the regular noise that elections produce. Thank you.
Okay, Michael Steen, FT, and then Stefan Ruhkamp, FAZ.
Hello, thanks. Mr. Draghi, can we just take one more run at Ireland, because I think there's a lot of interest on this.
I know it's not satisfactory what I'm saying, but it's very difficult for me to say something different. But go ahead.
Right. Well, just to try and understand a little bit, then, the ECB for emergency liquidity assistance has to sign off on it fortnightly. So whatever has or hasn't happened in Ireland, as we try and figure that out, is that something that the ECB still has to sign off on every fortnight? Or is there anything fundamental changing about the way the Irish government is proposing to deal with this debt? And then the second question on the possibility of negative interest rates. I think you said in December that you were technically ready for that. That debate, however, seems to have completely gone quiet. Have you had another look at it? Are you worried that maybe banks are not ready for it? Or is it something that you could still stand ready to use if you decided you needed to at some point? Thanks.
Thank you. On Ireland, really, I can repeat what I said before, that the Council took note. One of the things, however, that I can add is that there is no more ELA. So that's a positive step. But I can't go beyond that because, as I said, this is entirely in the hands of the Irish government and the Irish Central Bank.
Sorry, that means that
I think you should ask them, really.
Just on that, that means that the sovereign bonds that are replacing the promissory notes.
You are asking, you see, you are asking me details which I cannot, and I'm not in a position to give you.
If there were sovereign bonds replacing the promissory notes, would they be acceptable as collateral at the ECB?
No, I just, I'm sorry, I have to, you know, for me to comment on what another country's government, a national central bank are doing or are about to do would not be right, I think. On the negative rates, frankly, the Governing Council has not changed the position that I presented the last press conference. So it stays as I said last time. Thank you.
Pass it on to Stefan Ruhkamp, please.
Stefan Ruhkamp, Frankfurter Allgemeine Zeitung. Unfortunately, I have one more question about Ireland. You said, well, that is a decision of the Irish government and probably the Irish Central Bank and not your problem. But at one point, I guess it could be still a problem of the euro system because, as I understand it, the Irish Central Bank is now owner of a promissory note or something else, maybe government bonds with longer duration. And that should be part of the so-called ANFA assets. And I know that there are certain rules which cap these assets. So at one point in this year, you have to look at that. And do you have any proposal to the Irish Central Bank to reduce that?
You're running too fast. You're running too fast. You're running ahead. We'll certainly review the situation in due time. I'm not saying that this is the last word on this. I'm only saying that today the Governing Council unanimously took note of the Irish operation. And so I have to say that this is certainly not the last word. We'll come back to this.
Last question?
No, please.
Why
please.
did they ask you?
I'm sorry?
Why were you asked about that? Because obviously they could do that without the ECB Council to say yes or no. So why did they ask anyway?
They have taken an action. That's it.
Arantxa Iniguez.
Arantxa Iñiguez, Spanish press agency EFE. Mr. Draghi, next week you are going to report to the Spanish Congress. Could you give us an idea of the messages that you are going to give to the Spanish population and the Spanish government? Thank you.
Well, I wouldn't want to spoil it, but no, I can. I'm going to be there, if I have to say, more to listen, and I'll certainly explain the monetary policy of the ECB, its impact on the euro area as a whole, the effects of fragmentation, the situation of the banking systems in the euro area, the financial market situation, what are the prospects for recovery. I will not dwell into domestic economic policies. I will not comment on that. And for me, obviously, it is a unique opportunity to hear from the legislators of Spain their views about the economic situation in Spain, but also in the euro area.
Jean-Philippe Lacour. And then Brian Blackstone, please.
My questions were answered. Maybe can you comment the steps of France and Germany toward the splitting of the banks, or more strengthened recovery plans or something? They are pre-commit or pre-acting, sorry, what the EU may do into this matter, and the banks. As far as ECB is the bank of the banks, you have to hear the lobby telling that these steps are wrong or too quick and so on. So maybe you can reassure the banks. And maybe second question on ECB staff regarding the regulation role. There are some studies telling about 2,000 hearings, or we heard from 500 to 2,000. What could you maybe be clear to this aspect?
Yeah. Well, on the first question, we are kind of following from at this point still from distance the national developments on this. We also know that the Commission will present a directive on this, a regulation on this. We should say that we welcome the Liikanen report, whereby especially risky activities, trading activities, are being ring-fenced to some extent. I think it's quite obvious that we can't afford going on our own with separate legislations. It's quite obvious that eventually we'll have to converge on one rule for the euro area and possibly for the Union. This is in the interest of everybody. So I should also add that the various initiatives don't differ amongst themselves in a radical way so as to exclude this, or so as to make this convergence, eventual convergence, impossible. And but we are waiting for the Commission, and then we will have to express a legal opinion on that. So there will be other opportunities. On the SSM, let me go step by step, because sometimes you have sudden accelerations in the perception with which the SSM is perceived to be put in place. First of all, the legal act on the SSM has not been approved yet. Second, the consultation with the European Parliament is still in progress. Once the regulation is in force, the ECB will send a quarterly report to the European Parliament, the Council, and the European Commission on the progress in the operational implementation. And this report will be public. In the meantime, we cannot take any binding organizational and administrative decisions until the legal text is approved. Therefore, any conclusions are premature. For example, there's a topic that is a source of endless attraction, the number of staff. The number of staff will depend on the actual structure and therefore cannot be defined properly yet. The The ECB commissioned a promontory financial group to conduct a study for a possible organization of future supervisory function. Yeah, it's a study. It's not going to be the last study that we'll commission. It's one of the many proposals, so it's bound to change. Nevertheless, we have started conducting preparatory work, and this is done in close cooperation with national authorities. Let me say one important thing, however, that the national central banks and supervisors are truly very, very supportive of this preparatory work. You see really a constructive attitude, eager to act to build this new institution, and they have volunteered to help us through the exchange of expertise and staff. Thank you.
Brian Blackstone, Wall Street Journal, please.
Brian Blackstone with the Wall Street Journal. I want to go back to the Monte Paschi issue. Is this a warning sign that maybe the central bank is not the best supervisor for all of the Eurozone banks? I can only imagine in 2014 or 2015, every time something like this happens, you're going to be faced with a lot of questions, and it could damage the credibility of the ECB when it comes to the conduct of monetary policy. And I also want to go back to your points on the exchange rate. You say it's not a policy objective, but it is a channel through which monetary policy transmits to the economy. So what's wrong in an environment of low inflation of taking policies that might have the effect of cheapening the exchange rate, helping create jobs in the manufacturing sector, in the export sector? The Eurozone economy is still in recession and unemployment's at a record high, and they could probably use the help. Thank you.
Well, let me answer the second question first. The Governing Council is actually convinced that they are already taking these policies, which are compatible with price stability and job creation. If you look at all the actions that we have undertaken during 2012, you are bound to reach this conclusion. We are not doing exactly the same things that are being done by the US Fed in America. Well, okay, I mean, the institutional setup is different, but the ECB can hardly be blamed for running a policy that is not accommodative. And I did say this many, many times today. It is accommodative, we remain in full allotment, and we are ready to provide liquidity as needed. So now, we also allow, we changed our collateral in a way that banks can actually post their loans as collateral for their funding. We are still left, however, with the question why credit flows are so subdued, in spite of the many things we've done. And there are several answers, one of which is fairly, in a sense, is fairly obvious, and it's the first that comes to mind. It's demand. Demand is so weak. But there are also other considerations that we want to look at, and this fragmentation between large corporates and SMEs. We'll have to look into this as well. But again, I mean, the fact that we've used the additional credit claims as a further way to provide collateral. Now, we have addressed the funding issues. We cannot address the shortage of capital, and we cannot address the risk aversion that has reached high levels indeed. So the answer to this is that we will continue trying everything we can to make sure that credit flows will resume within our mandate, of course, which is maintaining price stability. At the same time, we believe that all the actions we've taken, will in the end find their way through the economy, so much so that we foresee a recovery gradual recovery in the second part of this year. On your first question, I'm sorry.
You just answered my question from earlier.
Second half.
Yeah, in the second half, yes. Yeah. I said, I'm sorry if I don't know the time, but I can tell it's about the second half. But on your first question, well, no, I frankly, what I said since the very beginning, let me find out what I said in the first press conference when it was not even sure that the ECB would actually be asked to take up banking supervision. I said, well, the framework for supervision has to be effective and ensure coherent oversight. The supervisory decision-making and monetary policy has to be clearly separated. This is very important. We said this since the very, very beginning. And then the rest. And then I said many other things. Well, I'll save you that. So I agree with you that separation is essential. Frankly, I don't agree with you about MPS and the future SSM being linked in any possible way, other than me being formerly governor of Bank of Italy and now being president of the ECB. But having shown you that Bank of Italy has acted properly and timely, there is no connection. But it's very important. I think it's an important point that you raised, many of your colleagues raised in the articles in the various newspapers that have spoken about this in the last few days. It's very important that the governance of this new institution be really strongly separated so as to be seen as separated. So I'm not sure whether the model would be like in US, where you have the Fed, New York Fed, and the Washington Fed, or would be other models. But I'm absolutely convinced of that. So yeah, I'm in full agreement with, I think, most of you who wrote about this topic.
Tonia Mastrobuoni, La Stampa.
Yes, thank you. Now, I was wondering if there's already a lesson to learn from the Montepaschi scandal. For example, that the power to remove the heads of the bank should be given to the Bank of Italy. Thank you.
Yeah. Well, certainly, one of the things, the creation of a one supervisor will involve profound legislative changes at national levels. One of which concerns the powers that the supervisors have to be effective. And one of these powers is the power to either, first of all, judge a manager, a top manager of a bank, proper and fit for the task. And the second is to remove to remove the manager if you have a sense that for various reasons he is not proper and fit any longer. So I think that is an essential component of the powers that supervisors must have. Right now, I don't think all supervisors have these powers, but some of them have that for sure. And so I think, if anything, one of the things that this story shows is that having more powers would have helped. Although when you have to deal with frauds, you never know. Thank you.
Etienne Balmer, AFP.
Etienne Balmer, Agence France Presse. Mr. Draghi, I wanted to know if the decision of interest rate was unanimous, since I'm not sure if it was already asked. And second, so my second question is about Mr. Weidmann, who said last month that he saw that the independence of central banks in the world were threatened to some extent. And he was especially mentioning Japan. And he also warns of the risk of an international currency war. So do you share his worry? Thank you.
The decision, the decision not to change interest rate was unanimous. Of course, there were discussions about, there were hints and discussions about how to improve financial conditions, but that's it. On the second thing, I think I've said what I had to say about exchange rates and currency wars. I think we should have in mind one thing. changes in the exchange rates that we see today are not really deliberate changes in the exchange rates as we saw many years ago, deliberate competitive devaluations. They are more the effect of macroeconomic policies that are meant to revamp the economies. For example, very low interest rates promise to stay low for a very, very long time. For example, the adoption of an inflation target, which is, everything is relative, of course, but which is distant from the current inflation rates. So, however, if these policies produce consequences on the exchange rates that do not reflect the G20 consensus, we will have to discuss this.
Okay, we'll have two more questions. We'll have one from Domenico Conti and one from George Lee.
Just one more thing I didn't answer. I think central bank independence is the necessary complement to central bank credibility within the mandate of price stability. The three things go all together. If you threaten one, you undermine the other one. So Mr. Weidman is absolutely right about being worried about central bank independence. Thank you.
Domenico Conti, answer.
Mr. Draghi, again regarding Monte Paschi, one further question about this, just to make a balance with the Anglo-Irish. I was just wondering if there's another possible lessons that could be learned by European policymakers, and I'm referring in this case to resolution. I mean, there's a resolution plan which has been discussed in Brussels. Do you think that a more effective resolution should be taken into consideration in the light of banking situations like this one? Thank you.
Like what?
Like Monte Paschi.
Well, I mean, Monte Paschi is not being resolved. So I will speak about, I don't want to comment on specific banks, but it's not being resolved at all. But the answer is that to have a one resolution mechanism is very important. Let me immediately make clear, it's not a bailout mechanism, it's a resolution mechanism. It means that banks would be resolved and could be resolved in a uniform way in the euro area, or potentially and possibly and preferably in the union. It means that members of the union have the same resolution laws, legislation. It means that the same category of creditors would be bailed in everywhere in the union or in the euro area. It means that you have a mechanism in place even when a bank fails, even if it's large, and you have a mechanism that can act in resolving a bank, achieving two purposes. First, without using taxpayers' money, so without bailing out the shareholders or the senior or creditors of various kinds. And second, without experiencing what we had with Lehman, namely the breakup of some essential elements of our payment system. That's why it's so important. And nowadays, for many banks in the euro area, the cross-border activity is so extensive that we need to move from a purely national to a supranational resolution mechanism.
For the balance on Ireland, George Lee, RTE Ireland, and then we'll finish the press conference on that.
Hello, Mr. Draghi. It's working? Yes. My name is George Lee, and I come from Primetime on RTE, which is Irish television. And I've noted your position where you're unable to get into the details of the Irish bank deal. But could I ask you, because a deal has been done, which will save the Irish government and the Irish people an awful lot in terms of debt repayments, what impact do you think that would you expect that to have in relation to the Irish bond market? or in relation to the Irish efforts to exit the bailout programme for banking, and also in relation to the reputation of Ireland in the financial markets? And also, in terms of the savings, is there any understanding that you have or any precondition, because the ECB is part of the Troika, which is supervising the Irish bailout, any understanding or any preconditions or anything like that in relation to how you expect that money, which is being saved on the repayments, to be used by the Irish government? And finally, Mr. Draghi, I'm sure people at home in Ireland would really like to know, how come it took so long, do you think, for an agreement to be reached? Thank you.
Well, let me say, you speak about an agreement, and I said that there isn't any decision today, so we simply took note, and that's what I can say today. But I can say that the efforts of the Irish government in this direction, but even more importantly, in the economic policy progress, on the economic policy front, on the financial policy front, that's what really mattered in the end, to reestablish the reputation of Ireland on the financial markets. And so, all in all, the outlook is really positive. Thank you.
Do you have any understanding or any preconceived notion about how the savings should be used or could be used by the Irish government as part of the Troika? Do you expect them to use it to pay down debt quicker, or is it up to them to use it the way they wish?
I'm sorry, you are asking questions I really cannot answer, not only because, as I said, we only took note today of this, but also because these are really internal policy matters where, frankly, a president of the ECB has no say. Thank you.
Thank you very much. We'll close the conference with that.
Thank you.